You don't have to be a Nobel laureate to know that times are always changing. And you don't have to be a financial genius to understand how you can invest wisely to navigate the course of eternal change in the world. On June 30th, 2016, the top-performing category of global stocks was the Standard & Poor's 500 large publicly held American companies. The U.S. economy had led the world back from the global financial crisis in a slow 7-year recovery, but the rest of the world's economies were not as strong. As the summer of 2016 began, fears of a global recession were sweeping across global stock markets, hitting China's manufacturing economy hardest. China's fledgling stock market suffered a 21% loss. Fast forward 1 year to June 30th, 2017, and suddenly a total turnabout had occurred. U.S. stocks became the laggards among global stock markets, and China's stock market was at the top of the world. Fears of a global recession turned out to be misguided. The U.S. recovery spread to the rest of the world, and foreign stock markets caught up with the U.S. Benefiting from 2020 hindsight, the quick turnabout offers insight into why rebalancing and strategic asset allocation are so important to investment success. In the 12 months ended June 30th, 2017, China's stock market delivered a 29.6% return, compared to the 21.2% loss in the 12 months ended June 30th, 2016. The U.S. went from being the leader among major global stock markets a year earlier to being the laggard in the more recent 12-month period. The pattern of today's investment losers becoming tomorrow's winners is fairly common. In the 12 months ended June 30th, 2016, among different categories of U.S. stocks, the biggest loser was small-cap growth, which suffered a loss of 0.6%. In the 12 months ended June 30th, 2017, however, small-cap growth stocks were the biggest winners, with a return close to 23%. The same pattern was also present in U.S. industry sectors. Financial stocks were the dogs of the 12-month period that ended June 30th, 2016, when they lost 4.2%. But they were the darlings in the 12 months ended June 30th, 2017, returning more than 35%. Strategic asset allocation and rebalancing help ensure you buy lagging assets when they decline in value. You're prepared in case today's laggards snap back, as happened in the instances highlighted here. This is a secret of investment success because it prepares you for surprises. The Standard & Poor's 500 index has repeatedly been breaking its all-time high for months, but a bad surprise could trigger a change in sentiment and a 10 or 15% loss at any time. However, no one can reliably predict the stock market, and economic fundamentals that drive stock prices have been strong and could continue to drive prices higher. Adhering to a discipline of broad diversification, strategic asset allocation, and periodic rebalancing remains the best course for long-term investors. We are independent financial professionals, communicating at a frequency attuned to you. To get our weekly reports about wealth management on your smartphone, subscribe to our email newsletter or YouTube channel.